So before I got the accident, I was fine. I used to do everything on my own. After the accident, how I used to work, things changed. Now that I could not move much, I could not carry because most of the times hospitality needs your two hands, your two legs, and now that I had one, I had to talk to my employer. They were lenient enough, they were nice to give me a position where I can work, I can still project what I used to, but then in a different way. I can be productive to the company, but in a different way.
Kwa majina ni William, nafanya kazi ya transport kupeleka watu airport to and fro, na nimefanya kwa muda mrefu, lakini iko na changamoto mingi juu saa zingine kama gari si yako, saa zingine ile pesa na mtu anapata haitoshi.
Hi, good morning, everybody. I hope you've had a lovely day so far. I would like to welcome you very warmly to this webinar. My name is Egbi. I am the Director of Embedded Finance at Seamless HR. And, further down in this webinar, I'll be able to tell you about embedded finance and how it connects to the topic we're talking about today. But today we're talking about harnessing cost of living adjustments for talent retention success. So short form of cost of living adjustments is COLA. And I know I always play with that term, it reminds me of Coca-Cola, which is refreshing. And we have an exciting lineup. We have like a fantastic speaker that's going to talk to us about this topic. And then further down the line, I'll come in and tell you about what Seamless HR does, to support this particular topic that we're talking about. So without further ado, we don't want to take too much of your time. We want to keep this super short but packed full with lots of interesting and helpful content for you. So I'm going to introduce our speaker for today. He's an amazing person. I think you understand what I mean when you start listening to him. I know we organized this webinar, but I'm looking forward to like just hearing and mopping up everything that he's going to talk to us about today. So today, Denis Nyongesa will be talking to us. Denis is the Group Human Resource Director, Group Human Resource Director at Ramco Group. And like the list of all his achievements, they're like too much, but let me tell you about a few of them. Denis is a certified professional mediator, and like this just shows how he's demonstrating exceptional leadership in managing HR functions across industries for over 24 years now and running. Denis is known for creating and implementing effective HR systems, and his focus is on organizational development, culture management, and performance improvement. So this topic we're talking about, this is his bread and butter, basically. He's an expert in managing industrial relations and is able to cultivate relationships with multiple trade unions and ensure that, negotiations and agreements, they are smooth, they're mutually beneficial, and everybody is happy at work. He is also a strategic advisor to senior leadership and company boards and has the skill to drive change, nurture talent through like very, very innovative, cutting edge HR policies and practices. And he's an expert in global HR functions, strategic integrations, and alignments. I think just listening or hearing about him is enough to whet your appetite. So I'm going to invite Denis now to come talk to us about our topic. And then I'll see you on the tail end, to take your questions and to just add on a few more conversations on the back of Denis's one. Denis, over to you.
Thank you so much. Okay. And thank you so much for your kind words. And good afternoon, everyone. I'm happy to be with you today. Let me just share my screen. Okay, confirm if you are able to see my screen.
Not yet, Dennis.
Okay. You're able to see?
Yes, please. We can see it now. Thank you.
Thank you very much. Great. Yes, it's an exciting afternoon and good afternoon. I'm happy to be with you today to discuss this topic. And it's a very, very current topic for all of us in East Africa. We are all feeling the heat of cost of living. The cost of living has gone high throughout the world. Actually, it's not only in East Africa. So I have a few issues to discuss with you, and like always, I insist it's a learning session for all of us. So I have a few contents that I'd like to share. First, I'll do an introduction, and then within the introduction, I'll speak to you exactly what COLA means, like what AK has just told us. And then I'll talk to you about employee reaction to high cost of living. There's a way employees react to it, to the cost of living. Then I'll talk to you about how employers respond to it using internal ways. So there's external ways where they will respond to it, and there's an external way also employers respond to this. Then I'll talk to you about ways and means in which employers also can respond to COLA using strategic partners. So that will be very important for us to see what are other areas that employers can respond to this. So if we are able to cover this, then it's just a guide to this discussion, because we can have a long way, but I have a limited time to speak to you about how to harness cost of living adjustments to retain employees. So I'll go straight to the introduction. And cost of living, just to kind of define it, cost of living adjustments are initiatives geared towards alleviating employees' financial distress occasioned by high inflation. When we talk about cost of living adjustments, which means you've already done adjustments. But before you do adjustments, people will still feel the heat of cost of living. So when adjustments are done, and what kind of adjustments are done? And I'd like just to discuss about inflation, because cost of living is highly driven by high inflation. Although there are other means of calculating cost of living. For example, you may use a consumer price index, but mostly we use inflation rate to ascertain the high cost of living. Now, inflation has hit us, and not only in Africa. If you talk about inflation, last year in UK was around 7.3%. And we talk about in US, it was 8%, thereabout. Here in Kenya, it was about 7.6%. So you can see Uganda was a little bit lower, around 5%. Tanzania a little bit low, around 4%. But this tells you that every year there is a percentage of inflation that goes high, and rarely does it come down. Mostly it is going high. And this inflation is driven mostly by, for example, we just had COVID a few years ago. After COVID, we got Ukraine war. After that, like in Kenya and some parts of East Africa, we got drought, which led to crop failure. Then in some parts of the world, we've had a problem with the exchange foreign exchange rate where the dollar skyrocketed in some countries. And when the price of dollar goes high, it means that the importation of goods becomes even more expensive. And then raw materials becomes expensive. Now, cost of living does not only affect employees, it also affects the employers and everyone else. When fuel price goes higher because of the exchange rate has gone higher for the dollar, then the employer finds it hard also to sustain importation of raw materials. Then he has to dip more in his pocket so that the organization can keep going. So this cost of living affects both organizations like a double-edged sword. It affects both organizations and employees at the same time. So we are going to look at the many other non-monetary means and ways that you can adjust or can use to adjust cost of living, where employers can also adopt or they can use that as a means and ways of managing cost of living. Because the employer finds himself in a very, very precarious position where you need to retain talent and yet you are also impacted with the cost of raw materials or other things that go by cost of high living. But also employees at the same time, they're asking you that if you don't, do certain things, then I can easily look for another job. So it's a very tough balancing act which employers find themselves in. But we are saying that there's always a few strategies you can employ that can help you, retain talent. But before we look at those strategies that we can employ to retain talent using collar, let's look at what happens to employees. For example, when employees are faced with cost of living going high, they always react. There's a reaction that most employees will do. And especially your critical talents, they will react to it. And what are some of the things that they do? So let's look at employees' reaction to high cost of living. So one of the things that I've seen, and it's still happening now, is that we have a lot of unplanned job switch that happens. You'll find one of your best employees just moving on without planning, just because he has been impacted by high cost of living. For example, in Kenya, we've had taxes being raised, and employees, instead of getting a pay rise, they've gotten less than what they were earning because there are some taxes that were introduced. So we've seen employees just switching jobs. Just one day they come, they go somewhere, like a difference of very few dollars, is able to take on a new job. He doesn't care other benefits that the former employer was giving. So he wants just to make sure that he's surviving, that he can't lose money through taxes, for example, or he needs to fill that gap that is being caused by high cost of living. So there'll be unplanned job switches that will happen. And we've seen a lot of talent movement, especially in East Africa. Many organizations have lost employees to other organizations, even to other organizations that you feel are inferior to you. They'll add a little salary to employee, then the employee will move. We've also seen a lot of rise in passive income sources, like here we call them side hustles. You'll find unauthorized job, employees taking jobs which are not in line with what they are doing currently. So that's another issue that we've seen, that employees will work and then find some time to go do another job and another job so that they can be able to meet the needs that are there at the moment. Then you'll also see union pressure. There's a lot of union pressure that comes by just by virtue that the cost of living has gone high. You'll find in collective bargaining agreements, unions proposing very high increments, and now that causes conflict between employers and employees. There'll also be low productivity. That goes without saying, that the reaction employees will have is that because they're thinking about their pocket, they're thinking about what they've lost, they're thinking about how they can manage high cost of living. So in that way, you'll not be able to harness so much from them, right? You'll realize that there'll be rise in stress, which also still relates to low productivity. And that again affects the employer. When there's low productivity, means the employer will not also be efficient, will not be also productive, you'll not produce as much as you wanted. And then there's more stress, which means there'll be a lot of returns, there'll be a lot of rejects happening, those who do production, those who are in service industry, customer service will be really affected. Then there'll be also a rise in workplace conflicts. As a mediator, I've seen a big rise in conflicts within organizations where from all cadres of employees, whether they are senior, junior, you'll find very small thing irritating someone. And you wonder, we are not supposed to really disagree. You'll find a manager not approving something, not because there's a reason of not approving, but because people are going through a lot in the background to the extent that they're affected, and chances of having emotional intelligence is no longer there. You see it even on roads, how people are driving, you see a lot of road rage. So some of this stress, which is related to financial strain, lead to rise in conflicts. And then there is also I've seen a lot of rise in workplace fraud. Employees will look at are there any other means and ways that I can get some money? And if you have weaker controls, or if you are not reviewing your controls and processes, you'll be so hit hard because employees will look for any available opportunity to make some money. And then again, something that's been very prevalent is that there's a lot of abuse of digital lending apps, where you find that most employees who are now, looking for money through getting loans from digital lenders, which are very high, which are very expensive. If you don't pay, the penalties are very high. And that still goes back. It's like a vicious circle. The employee becomes stressed, there's no low productivity, there's depression, there are conflicts. So all these things that I'm talking about are intertwined actually. And the effect is huge when it comes to the employer. So it's really important that the employer pays attention on how he can harness cost of living adjustments to ensure that he retains talent, to ensure that it's not just retaining, to ensure that there's productivity, to ensure that employees' happiness is guaranteed at a place of work. So we may want to see now what are some of the employer's internal responses. When I'm talking about internal responses so much, what are some of the strategies the employer can devise internally to respond to high cost of living? And those responses are part of the cost of living adjustments that is the topic for us today. So one of the most important strategy an employer can think of having is educate on personal financial management. It helps a lot because when you educate your employees how they can manage their finances, first of all, making them aware of the season that we are in and how can you manage the little that you have. Such kind of trainings, I've seen them helping a lot. And education, it will include savings. How can you save? How can you, plan better than you're planning? How do you manage your debts? So I think an employer has that big moral role to play in terms of helping employee understand the situation they're in and also how they can manage the situation. Another one, which is now, of course, considering inflationary increments, and these inflationary increments should not be based on merit or performance, because whether the employer has performed exceptionally or not, they are also affected. The price of bread remains the same. So employers are encouraged to consider first inflationary increment to staff and inform the employees about it transparently. So that will be one of the areas where an employer will respond and will make employees feel like he cares for them. Because the moment you ignore that they are going through this kind of a situation where they are strained financially, the more they feel you don't care about them and the more you lose them. And remember, our objective is to retain them through this difficult time. So I've seen also one of the strategies is employing hybrid working options. Now, like I mentioned earlier, one of the reactions of employees during this period is they will tend to look for more jobs, do more than one job at the same time. And that makes them not become even productive in your work because they're not doing it with your permission. Now, how do you beat them in it is that look at working options. If they're employees and COVID taught us, there are some roles in an organization that they don't need an employee to be there 8 to 5. There could be a designer in an organization who can do design job or any artworks when he's at home, for example. Save that employee that cost of transport, that cost, that fare, and that make him aware that I'm saving you this transport so that I can help you manage the current cost of living. So that is an adjustment that you're making to the employee to help the employee perform better. There is also change of policies. I know we have some policies that, as a good practice, we always encourage employees to go and leave and rejuvenate. But there are cases where an employee is in need of some money and you're not able even to pay that employee that money at that point because you're trying to balance the employer-employee issues. Now, if an employee has long holiday, long leave, like leave days, and he needs some money, what would be very hard for you to say, look, if you have like 40 days leave, instead of sending you on leave, why don't you go on leave for 20 days? Then I pay you the remaining 20 days. So that the employee feels like, okay, what he needs is really money, but you're also balancing with rest. So it's a strategy that helps you make the employee liquid so that you can help the employee manage the inflation and the high cost of living. Another important aspect that I keep talking to my team is about how do you market what you have. For example, we never package to our employees non-monetary benefits that we give them. And I've seen it working in many organizations where you package non-monetary benefits because with time employees may take them for granted. And some of them, they think you can get them from every other organization, which is not true. So it's important that internally also package them to employees, new coming employees or those who've been there, always remind them, did you know that we take care of you? We give you 30 days rest or sick leave as opposed to 7 days. The law says 7 days, but we're giving you 30 days. For example, are they aware that it's something you're doing willingly and it's an important thing? Then conduct more of stay interviews as opposed to exit interviews. Again, an exit interview, you're conducting an exit interview when you have already lost the talent. Why can't you conduct these interviews when the employees are still there, which we call stay interviews? Like, what is it that you think we should do to help you manage the cost of living? For example, let them give you their opinion. How can we assist you in this situation? So stay interviews are meant to find out what employees feel that will help them stay with the organization longer, then find a way of addressing those issues. Then we have well-being, checking the pulse of your employees in terms of wellness and make sure that you deploy strategies that are able to help them, very practical strategies that are helping them. So is there a way that I can help my employee who is living in an expensive house and wants to move to a cheaper house, but still he doesn't have rent to cater for deposits? How will I know that information? Maybe by conducting wellness surveys, they'll be able to tell me, I'm having something disturbing me, and what interventions can I put in place to help these employees? Another aspect that would be a very good strategy for employers to respond would be review salary negotiation during recruitment we all have one way of discussing salaries. For example, we always talk about your gross pay. You know, this is your gross pay, which is inclusive of taxes and all that. I've seen most employers now, because they want to attract talent, they are telling a talent whom they are recruiting, like, look, I'm going to hire you and I'll take care of your taxes. You tell me the next that you want to go home with. What does that mean? For example, in Kenya, with the changes of taxation, an employee or a candidate will be attracted to you because you're saying, in case the government changes taxes, I am assuring you I'll still pay you what we've agreed now, which means the company will be taking the burden of taxes. That's a strategy to attract talent to the organization where you're sure that they will feel much appreciated here and cushioned against any unforeseen taxes that the government may impose in future. So those were internal kind of things that an employer can deploy just internally to ensure that he's able to manage high cost of living and ensure that the adjustments that he's putting in place are helping employees to stay. But there are other external strategic partnerships that can be deployed by employers that will help mitigate the high cost of living that affects employees. And I'm going to, they are in two parts. One, they are negotiated corporate staff packages. As an organization, you enjoy economies of scale to an extent that with whatever you're producing as an organization, you can negotiate with certain service providers to consider some discounts that you can now ensure that the employees benefit from them. For example, retail outlets. If you are an organization, you're a company, you've been there for long, you have a reputation, and you know you're having employees in organization who need certain services, because employees consume most services from retail outlets. And let me give an example. You're an organization that deals with oil, or you distribute oil, and then you have a partnership with an organization that sells stationery. You are very sure that when the schools open, your employees will need to go and do shopping for school items. What kind of partnership can you, using your muscle as a corporate, negotiate with a retail outlet which deals with stationery and say, look, I would like you to extend some discounts to my employees when they come to purchase books, for example. And let's discuss about how we can also support you as a retail shop in terms of what I do as an organization. If I'm selling oil, is there a way that if your employees come to my gas station, I can extend some discount to you? So it's a mutual beneficial. These are the things that organizations, if they use their corporate muscle, they can negotiate and get discounts driven down to employees. Special insurance packages. For example, you have employees who want to take life cover, or you have employees who have motor vehicles, and you go negotiate with the insurance company that for all my employees, if they're coming to take insurance cover for their cars, I would like you to extend a certain discount to them. That is doable. That's an external partnership you can deploy that will help alleviate the distress that financial issues are causing to employees. And also compelling retirement packages. Pension, for example. If you told an employee that, you see, the pension I've been doing 6%, I'll add 0.5%, it is something that an employee will feel happy with. Affordable mortgages, definitely. If you partner with organizations that do mortgages, you will be able to negotiate rates that will be helping employees in your organizations to feel like you're alleviating them the distress caused by inflation, for example. So those are negotiated corporate packages, but we also have embedded finance partnership, and that maybe okay, we'll talk about it sometime, but that's a very important aspect where organizations when they are also in distress, because we agreed that this distress is both for employees and the organization. Organizations' cash flow also are not guaranteed. So they're having difficulties in doing collection because everyone they're also selling to, they're not paying them on time. So an organization can partner with another organization which can manage, for example, salaries. If I discuss with, say, Seamless and say, look, if you are able to pay salaries, then I'll pay you when I'm able in the course of the month. But the issue is I want my employees to get their salary timely. By 30th, every employee should have salary. If I was to do it on my own, because of cash flow constraints, it will prolong and it will affect employees. So that timely payment of salaries to manage cash flow with the employer, it's a very important engagement with external partners who do embedded finance that will help employees to ensure that they are able to manage their cash flow. Promotion of saving culture. If an organization, a financial organization is able to come up with the parameters where they're able to tell employees that, look, if you save money to this extent, I'm able to give you, say, a facility, whether it's a loan or whatever it is, so that employees can keep on developing that saving culture. Those are things that will help them manage cost of living. Then lastly, there's affordable loans with strict vetting. Again, if you move away from informal loans from maybe some digital lending apps, you have a formal arrangement with a reputable organization where as much as employee need credit, but that credit can need to be vetted so that that credit also does not become a problem to them. And then it will be very important for these organizations to liaise with the HR organization. What is the net worth of this employee? How much can he afford to pay as an installment per month? So it's something that you're doing. As much as you're giving a loan, which is affordable, you're also vetting to make sure it's only employees who really need that help that are given, and also they are able to manage the repayments, as opposed to the digital apps where they'll give you without caring how you get money, whether you have enough money to pay or not. So this will be another important partnership with an embedded finance organization to help you manage that. So that brings me to the end of our discussion. And I'm happy to hand over to Oke so that if there are any questions, yeah.
Awesome. Awesome. Wow. So I told all of you that this was going to be like super packed, like very impactful. I hope you can see in just like 20 to 25 minutes how much value that Denis has shared with us. I've learned something new and I'm going to ask you about it later. And we have some questions that have already come in, but I think we should take all the questions at the end. So I'm just going to continue from where you stopped and talk a little bit about embedded finance, which you've so graciously mentioned in your presentation. So I'm going to talk about embedded finance very quickly, then we take all the questions together. Please, if you have questions, please drop them in the chat area. And then we'll take all of them together at the end. I hope everyone can see my screen. I'm fingers crossed that you can see my screen. And I'm just going to proceed now. So Denis has talked to us a lot about, has talked to us a lot about the pressures that employees face and the kind of behavior that might come out of those economic pressures when they're having economic or financial pressures. What kind of behavior they might exhibit, looking for new jobs, doing side hustle while doing your job. And, the impact is to the business because productivity will drop, engagement and loyalty to the company will drop. And, one of the things that he talked about ways or tactics that company could use were embedded finance partnerships. And I'm happy to share that, Seamless HR offers such partnerships. And our range of products, our range of embedded finance products are called Barizi, and I'll tell you everything about Barizi. Barizi is both for employers as well as employees, and it covers financial products, multiple financial products, from bulk payments to statutory remittances to employee benefits, which I will tell you all about right now. So what is Barizi? Barizi is comprised of basically two products. It's an embedded finance product owned by Seamless HR, and it has two arms. The first arm is called Barizi Payer. Barizi Payer is for employers. So it's a web-based platform from where you can pay all your salaries, whether your employees are being paid into they are using a bank account, or whether they are using M-Pesa or any other digital wallet. You can disburse salaries through Barizi Payer. You can, whether you are a Seamless HR customer or you are not using any of Seamless HR products, you can also disburse salaries through Barizi Payer. You just sign up, log in, upload your Excel sheets, and disburse to your employees. Or if you use Seamless HR products, like our payroll module, for example, when you finish calculating your payroll, you click a button that says disburse, and Barizi Payer disburses to all your employees. And I'm talking about their net salaries. I'm talking about statutory remittances like taxes and pensions. All payments, you can do it on Barizi Payer. Now, the good thing about Barizi Payer is it's free, completely free of charge. You can sign up free, and all transactions for the first 6 months are free. So even if you have 10,000 employees that you pay every month, for the first 6 months, you won't pay any transaction fees. It's zero. That's our way of welcoming you onto the platform. And then there's Barizi app too as well. And that's for the employees. But before I even go to the employee side, once a company is using Barizi Payer, right, the company is also entitled or can access something, business credit from us. So we offer two types of credits. The first one is called salary assurance. Salary assurance is basically, let's say your company does not get its inflow on time. You're managing cash flow. The other businesses you are serving don't send your payments on time. You don't have to delay salaries to your employees, because that can lead to discontent, even strikes in some instances. So what salary assurance does, it guarantees your payroll. If you say, I want to ensure that my employees are always paid on the 27th of every month, as long as you are paying them through Barizi Payer, you are using Barizi Payer, you can access salary assurance, and your employees will get paid. And then, you can then repay when your own cash flow comes before the next salary cycle. Also, companies can also access business loans. So if you need cash to buy inventory, to scale, to run your operations, as long as you're processing your salaries through Barizi Payer, you can also have access to that. So that's for the employers, payments, and then business credits. That's what you get on Barizi Payer. But there's something else that you also get. Once a company is using Barizi Payer to pay salaries, all the employees of the company can then access other financial products. For example, they can access different types of loans. They can access end wage access. End wage access is a product where, once, let's say an employee earns 100,000 shillings, right? And today is the 15th of the month. Technically, that employee has earned 50,000 shillings, half of their salary. They can withdraw that money. So they don't have to wait till the end of the month. They have access to their salary, and then, but the employer is still paying at the end of the month. So that gives the employee some kind of flexibility. If they have unexpected emergencies, they can reach out for it. Salary advance is also available on the platform, as well as term loans. So for employees that have worked with companies for long, you want to tell them that, hey, the fact that you've worked with us for long, you can access more long-term credit, 12 months credit, for example, and a higher amount, and then pay very, very conveniently as well. And then there are other financial products that are mortgages, asset financing for any kind of assets they want to buy, whether it's a car, even for things like food as well, electronic appliances, and of course, high interest savings. Now, what all this does, what these help you do as an employer, or that they provide for you in the context of what we're talking about, is it makes your benefit suite more robust. So like you don't even have to pay the employee more money, but because of you, they have access to a platform where they can get financial products, the products that they need to make their lives more comfortable. The same thing they want to go and hustle for out there, they can get it through you. So these are all, if you need to talk to us, whether you're an existing customer of Seamless HR or you're new, you've never used our product at all, but you're interested in, our embedded finance products, please send us an email at embeddedfinance@seamlesshr.com. And then, we will book a session with you, talk to you more about it, and, basically, hopefully bring you on board as soon as we can. Denis, I'm going to ask you to turn your camera back on now because it's time for questions. And I've had, Moses, it's your first time hearing about Barizi Payer. Yes, it is. Matter of fact, we're just now welcoming companies who are piloting with us because it's our first time rolling it out as well in East Africa. So if this is something that, hey, I'd like to start this with you, sign me up. We'll be very happy to have you. Drop a message and then we'll follow up with you and tell you more. So we're diving right into the questions now. And I'm going to start from the first one. They mentioned your name directly, Denis. This is definitely for you. And the question is, hi, Denis, how can we involve employees in the COLA decision-making process to enhance their buy-in and their trust?
Wow, that's a very nice question. And I always tell employers that we should never always think that we have the monopoly of ideas. Most good ideas and practical ideas come from employees themselves. And I'll give you some examples how you can involve employees in managing cost of living and also making sure that those adjustments that you're looking at are helpful to them. Recently, we had a meeting in one of our organizations, and the employees decided that if there are some employees who make certain careless mistakes that lead to products being rejected in the market and give them a bad name, they'll be penalizing those employees, and money that is collected from those employees will be put in a basket, and that money will be used to help employees who are having affected by floods. Fantastic idea from employees themselves. Like, we want to make sure that we reduce rejections, and for us to reduce rejections, and we'll make sure if you do work carelessly, we'll penalize you, and the money will help support employees who are affected by floods. So it's so much about having an open and transparent surveys with employees. Like, what are some of the areas we can help the organizations to save? Because we realize that it's from the savings from these organizations that can help employees in terms of the money should be taken back to employees. Or when the company now makes money, then it's able to make, if cost of living, inflation adjustment or salary increment was 8%, the company can make it 10%. So my answer to that question is that do surveys. Surveys help employees participate in decision-making for organizations. And you'll be amazed on how much ideas employees will give you, where you can save. And as an employer, when you save, you don't put in your pocket. You take that money back to employees in one way or another, increase their medical cover, for example, limit. If it was 100,000 Kenyan shillings, make it 150,000 Kenyan shillings, because employees are working hard to save.
Awesome. Thank you so much, Denis. I have another one for you. So coming back to you, and the question is, hi, Denis, how can companies mitigate financial risks associated with fluctuating COLA rates due to volatile economic conditions? So like, today is up, today is down, today is far up, today is mid down. how do you mitigate the risk? If it goes very high and you raise cola high and then it comes back down again, you can't cut people's salary. So what do you do? How do you mitigate that?
Great. Yeah, a good question. And again, some of the strategies I mentioned could help, but like inflation is calculated as an average rate in a year. So all your strategies should be based on at least a year. Most organizations declare their profit and loss in a year. So I feel, first of all, you need to have a period that's agreeable, that you cannot be increasing employee salary in February and again August and then December. So that's a policy issue, that we will always sit down and agree on performance or inflation increments in a financial year, where the company is able to know how much it has made, and based on what has happened the previous years, you commit to give to adjust, to make adjustments in cost of living, and we are hoping that should be able to take you for another year. Now, because in the course of the year, there'll be other fluctuations that happen. Now you'll have to employ internal mechanisms like what I talked to you about. If there are other things you can do internally in the course of the year because of the volatility, introduce them in the course of the year, but you cannot be like giving inflation increment in between years. So you have to be a bit practical, because yes, I know fluctuations keep happening, but because it's an organization that is audited and also it pronounces its profits in a specific period of time, it should be well understood by employees and communicate to employees that, you know what, we are able to make changes together, but within a period of time, because it can also affect you in a way.
Okay. Thank you so much, Dennis. I think the next question is for me from Moses, and it says, hi, okay. Are there specific financial products or services that have been particularly effective in complementing COLA adjustments, particularly for blue collar or informal workers? Yes, actually, thank you, because your question has prompted me now. I would say end wage access. End wage access has been very, very popular with the blue collar worker segments that we've worked with, manufacturing, agriculture. And because it's so easy to access it, and and it's very convenient as well, always available. So I think that's been very popular. Asset financing has also been popular, but not only for assets like cars, but something as simple as food packages. So just being able to say, what's the food package that we feed a family of 4 for a month, and then using end wage access. So instead of the cash, you are giving the actual food or items that that family needs. That's also been very popular. And the last question that we will take is also for me. I have one question for you, Dennis, so please hold on. The last question is, hi, okay, how can SMEs implement effective COLA adjustments without significant financial strain? Come to Barizi, right? There's no financial strain. First of all, you save money because your company saves money on transaction fees. You're not paying 50 to 100 Kenyan shillings per transaction every month that you're trying to disburse to your employees. It's free for the first 6 months. And it's like dirt cheap for, going forward, much cheaper than whatever you're enjoying right now. So that's one way. But also, just by using Barizi Payer, your employees now have access to multiple products, which strengthens your position as an employer, right? Because they can get these and reduces attrition, which is our overall goal or overall objective. So the answer to that question is sign up with Barizi, send us a message, we'll book time, tell you more about it, and then, we can go. My last question before I bid you all farewell is for Dennis. And I know you were expecting a question that has to do with our topic today, but no, not really. I just wanted to ask you, like, what's the most, you've had a very amazing career. I look at you, like your professional achievements, your expertise in HR, in talent retention, and it just blows my mind. So my question is very, very simple. What have you what interesting thing would you say, the most interesting thing you say that you've done to just retain top talents you know, I know we're talking about cola specifically, but just over your career, is there any other thing that you've done like that you think just by being this way or acting this way or doing this thing, this was something very interesting that helped me keep somebody who was very good?
Yes, I'll tell you for sure, and I mentioned it in my presentation. One of the things that have worked for me to keep top talent has been conducting stay interviews. When you conduct stay interviews, and I'll give you an example. Many employers think when you do stay interviews, for example, if I interviewed you, okay, what is it that will make you stay with Seamless for very many years? I am 100% sure it's nothing to do with like I need to be getting increments every year. There are other things that you would want your employer to do for you that some are very intrinsic that will connect you to the organization. And now, if I'm an HR manager and don't know those intrinsic things, I will always not be able to keep you. So there's an organization which was an IT organization, and young people, mostly it's young people, and I do a stay interview and they tell me, you know what I want is, I've just gotten a baby, for example. It's one of the feedback he gave me. And if the organization can pay school fees for my child, the bond I have with my baby is the same bond I have with the organization.
Absolutely. Absolutely. Very interesting.
Paying school fees in a school, it's an annual payment. It's not like recurrent every month. You'll find it's even cheaper than these increments we keep thinking about, like increasing salary every year. So many employees come out with very different things. The other one's talking about school fees. Someone was talking about something different. I'm building a house. I need just certain support. Now that house is a reminder of your organization that, yeah, it is Seamless that helped me finish this house. So when you do stay interviews, you get so many things that are very emotionally connecting employees to an organization. Whereas employers always feel like, no, people just want money. It's not. So when you do stay interviews, you realize those things, and it's so easy for you to draw a budget that can fit into individual different items or aspersions that may want them to stay in an organization. That has helped me a lot.
Wow. So now I'm worried because if you perform a stay interview for us here now, we're not going to leave this webinar and we're right on the hour. So before Denis holds a stay interview for us and keeps us here till, infinity, I want to thank you all for being such amazing guests. Thank you for your questions. Thank you for your time, for being with us here today. Please don't forget about Seamless HR, all your HR processes in one place. So everything you need from onboarding to offboarding your employees, you can manage them with us. HR information system, recruitment management, payroll, time and attendance, and of course, embedded finance as well. There's something else I wanted to also tell you guys about, which is our refer and earn scheme. If you refer a business to us, you can earn up to $10,000. No jokes. There's people who've like cleaned out on this already, and you don't have to do a lot of work. You refer them to us, we do all the work, and when we close it, you earn your bonus. It's like easy peasy, lemon squeezy. So if you know any company that can benefit from any of our products, please reach out to us or visit seamlesshr.com/refer and earn. And we'll be very happy to pay out that money. Thank you so much for your time. We'll give you back the rest of it. Thank you so much, Denis, for spending your time with us and sharing all this knowledge with us. On behalf of Seamless HR and everybody who's on this webinar, we say thank you to you and we wish you all a lovely day. Please enjoy the rest of your day.
So before I got the accidents, I was fine. I used to do everything on my own. After the accidents, how I used to work, things changed. Now that I could not move much, I could not carry, because most of the time it's hospitality needs your two hands, your two legs, and now that I had one, I had to talk to my employer. They were lenient enough, they were nice to give me a position where I can work, I can still project what I used to, but then in a different way. I can be productive to the company, but in a different way.
Kwa majina ni William, nafanya kazi ya transport kupeleka watu airport to and fro, na nimefanya kwa muda mrefu, lakini iko na changamoto mingi juu saa zingine kama gari si yako, saa zingine ile pesa na mtu anapata haitoshi.